Hello, it's Wednesday, the 13th of January. It's actually the 14th of January, 2009, and this is Brian Shannon from alphatrends.net. We had further selling here today. The NASDAQ was down 90 cents or 3%, and we came right down to these lows here that we've been monitoring at about $28.50. I think the low today was intraday maybe 28.47. Just because this level has been support in the past doesn't mean the market will hold up here. So you've got to be very careful. Again, this weekly time frame, we started really looking at this bearish flag in here last week, and now that we've got it right down to the bottom point, the bottom part of this range, breaking decisively below here could lead to further selling. A lot of times when you get the market down to an important level that's widely watched like this, though, what you see is a break below it. In particular, when you see the market, as it has here, sell off very quickly, 3 points or about 10% over the last week and a half. So it's getting stretched to the downside. And what I'm trying to say here is a lot of times you might get a quick move below that widely watched level, and then if it can rally back above it, then that's where counter trend rallies come from. There's clearly absolutely nothing bullish about this market. This level, just because it's been support in the past, doesn't mean it will be again. It's only a potential level where buyers are going to be found. It's obviously important because the market basically stopped right at it today, and it's easy to see why that support is being widely watched, including here by us. We do still have a steeply declining 5-day moving average. We still have the pattern of lower highs and lower lows. So there's nothing in here to suggest that a low has been found or is in the process. Intraday, it looked like there might have been a little bit of a move higher here as it got above daily VWAP, but we got a quick move lower below it. So that was a failed move basically from here. Above the daily VWAP came that fast move, and as I had said on Twitter, you cannot trust these rally attempts for more than just a very short-term scalp trade, because the primary trend is so dangerous here on this weekly time frame that basically any textbook would tell you that a low volume rally like this and then the bearish flag, we're likely to continue down towards those lows, and that's obviously the path of least resistance. So you've got to be extremely careful in here. We're getting oversold, so maybe we're due for a bounce somewhere in here soon, but it's only something that should probably be attempted by the most aggressive and disciplined traders. That is, if you're attempting to find that bounce. Oil continues to just kind of chop around in here. It did get below that level of about 30.5, but didn't hold below there. In fact, it made a higher low and then recovered slightly after breaking below that support just at the 30.75 level that we're looking at. So it's back above that. We've got this 5-day moving average starting to flatten out a little bit. I still think that if a rally is going to materialize in oil, it's probably going to get above $32 a share. Getting above that $32 a share level and holding above there could set up a similar type of rally. So a lot of people, myself included, when you trade oil, like to look at the DXO. The DXO is the double long oil, and we've seen some big volume in there. In this market, the DXO, that is holding up a little bit better than the USO, but that's just because of the way they calculate it. I think that above $3 or so, it looks like it's breaking above some resistance. It's got a higher, slightly higher low in here, but check the way those funds are priced, because it tends to be kind of they price them daily basically, so it's not going to over time do double the exposure of oil. I don't know if I explained that well, but that's not my area of expertise either. So the financials continued lower. They were down another 5.7% today. They lost 67 cents, coming down to test this level here. This low I think was it's $10.44. $10.44. So it's also at a very critical area. There's nothing to suggest that it's going to hold here. We've still got an intraday pattern of lower highs and lower lows. We've got a declining 5-day moving average. Odds do not favor new purchases in here. Even if you're trying to pick a bottom or a turning point, there's no technical evidence. Yesterday we were looking at the potential of maybe getting above this level here. $11.40 actually is what I was saying. Above $11.40 is what it really needed to get above. Obviously, we're not there, and that's this level that was the the big level of support that had broken, and below that we've obviously got this lower high, and now we've got new lower highs as well. This level of support from the last couple days, the market opened right below it and then continued to sell off, and had a very similar failed break here in the afternoon, and then just got really choppy in there. So financials are broken, looking like they're headed for a test of these lows. There's nothing to suggest otherwise on really any of these time frames. You just have to be very careful with your shorts here, because if we get a short squeeze rally, it'll occur quickly or extended to the downside. So if you've got good profits in these shorts, I would suggest taking some of the profits and then using rallies to reinitiate a short position. The semiconductors, which were slightly up yesterday, I think they were up 1% if I remember correctly, probing their important level here at 1640, 1650, and obviously it's just not looking good no matter what time frame you look at. The daily time frame, we see that's the key level of support in here recently. Again, I think on all these markets you got to look at them as they're at critical levels where in the critical levels, what happens here a lot of times when it breaks below these widely watched levels. Let's just go back to the cues for a minute. What happens a lot of times is that people are watching these cues, and realistically, why on earth would you wait so long to sell under here? We've been down 10% in the last week and a half, so that the people who sell on a break of an obvious support level in here are not always the most savvy traders, and if you really ought to be getting out when they gap down here and show this pattern of lower highs and lower lows, and that 5-day moving average is declining. So for that reason, a lot of times we get failed moves or fast moves from those failed moves. The Russell 2000 is it broke below the $46 level. Let's take a look in there. That's a $46 level right here, and I'd suggested that the next potential area that it's going to test is 44. Maybe you get a little bit of a slowdown right in here, but there's no sign of a bottom in the Russell 2000. Lower highs and lower lows. Declining 5-day moving averages right now. The next, if this market rallies, likely to find some resistance up near about 46.5 or so. And let's take a look finally at the S&P 500. The SPY was down $2.74 or 3.1%. It broke below that 84 level. Now we're going to have to monitor that 84 level and see if it acts as a level of resistance. Actually, 85 is what I just was eyeballing it, but it broke below that $85 level that had been the support. Broke below it basically on the gap lower and continued down in here. Now you're going to look at this 85 and a half as a potential level of resistance when this market rallies. We've got the declining 5-day moving average. The market, intermediate term is in a downtrend, short term is in a downtrend. Longer term, obviously, it's in a downtrend as well. It's broken below these lows on the weekly time frame, and that would suggest that we're heading down, close, maybe not to the lows, but we're definitely still in a lot of trouble. And I'm expecting that we'll probably get some kind of a bounce rally in here soon, but it will only be for a very quick bounce.